All right, today we're diving into a pretty wild vision of the future. The idea that the same crazy explosion we're seeing in AI is on a direct collision course with our entire financial system. And when they hit, everything changes. So let's break it down.
So, right out of the gate, we get hit with this massive claim that by 2035, the world will be completely unrecognizable. I mean, wow, that is a huge statement. So you got to ask, how do they get there? Let's follow the breadcrumbs and see where this argument leads.
And here's the central thesis, right? It's that these two gigantic forces, AI and finance, they're not just two separate stories. Nope, they're actually intertwined and they're heading straight for each other. So we're going to unpack this vision piece by piece and figure out how they connect and, more importantly, what it could mean for all of us.
Okay, so part one, an unrecognizable future. What's actually pushing us towards this new world? Well, it all boils down to one thing: the absolutely insane speed of technological change.
The bedrock of this entire argument is this idea of exponential change. And look, we're not talking about your phone getting a little bit faster each year. No way. We're talking about technology getting so powerful, so fast, that it's almost hard to wrap your head around it.
And to help us visualize this just insane growth, the source uses this perfect metaphor: the AI hockey stick. It's a great way to think about it. Let's check it out.
And here it is. It just lays it out so clearly. You see that long, flat part of the stick? That was AI for like 40 plus years, from the 50s all the way to 2000. It was all theory, slow progress, stuff happening in labs. But then, boom, we hit the blade, and things just went vertical, an absolute explosion of progress.
So the big question is, what happened? What caused that insane jump? It really comes down to one powerful idea: deep learning. And this was the fundamental paradigm shift. Think about it. We went from telling computers exactly how to solve a problem to just giving them the problem and letting them figure out the solution on their own.
And this is where it gets really interesting. The old AI, it was basically just a really, really fast calculator for human ideas. If a person made a mistake in the logic, the AI would just make that same mistake, but way faster. This new AI, though, it's a whole different beast. It learns, it improves. It can actually come up with solutions that humans never would have thought of. That's the game changer.
Of course, this didn't just happen out of nowhere. The argument is that this AI explosion needed rocket fuel, and it got it in two forms. First, just a mind-boggling amount of data to learn from. And second, the sheer raw computing power needed to crunch all that data. Put those two together, and you get liftoff.
Okay, so let's pause for a second. We've got this superintelligence that's growing at an exponential rate. It's incredible. But now the story takes a hard right turn and asks a really crucial question. What about our money? Is the system we use to manage value even remotely prepared for what's coming? And that brings us to part three. Because while technology is screaming into the 21st century, the argument presented here is that our financial system is like old, rusty plumbing. It's creaking, it's leaking, and it might just be ready to burst.
So here's the core conflict of this whole vision, right? You've got this incredible futuristic technology on one side, and on the other, a financial system that's described as being totally stuck in the past, unstable, unfair, and, well, broken.
And the source doesn't pull any punches here. It doesn't just suggest there are problems. It lays out a very direct, very pointed case against the traditional banks.
So what are the big accusations? Well, it starts with the 2008 crash, obviously, and the massive bailouts that followed. But then it gets right up to today, claiming that banks are not only lying about crypto, but are also actively involved in laundering huge sums of money for criminals.
And to put a fine point on that last accusation, it throws out a very specific number: $881 million. That's how much it's claimed the Sinaloa cartel laundered through major banks, with, according to the source, a blind eye being turned.
So, why would they do this? The argument boils down to one word: fear. The claim is that when banks attack crypto, it's not about protecting you, it's about protecting themselves. They're scared of losing their grip on the entire financial system, a grip that technologies like crypto challenge directly.
So, we've seen the two big problems laid out: this unstoppable AI and a financial system that's in trouble. So, what's the proposed solution? Well, it's not about fixing the old system. It's about building a brand new one from scratch.
And the key word here is decentralized. The idea is to move away from a world where a few big banks hold all the power. Instead, in this new vision, power is spread out among everyone who uses the system. It's a complete flip of the script on who's in control.
And listen to the language used to describe this new system. It's not just about technology. It's presented as a movement. The goal is to make access to finance a basic human right, not a privilege. It's about putting you, the individual, back in control of your own money, your own future.
And this chart just lays it all out, side by side. The legacy system, controlled by banks, where access is a privilege and the motive is to profit from you. The decentralized future, controlled by the people, where access is a right and the motive is to empower you. You really can't get a clearer contrast than that.
So, it all comes down to this one huge question. We know intelligence and data are exploding. That's a given. The real question is, what happens to our money? Will the old financial system somehow adapt and evolve to keep up? Or is it destined to be replaced by something entirely new? Is a revolution inevitable? That's the powerful idea we're left to think about.